Hi, over here we have Nisheeth, Head of ESG Reporting and Disclosures from AIA. So I'm going to ask you a few questions, Nisheeth. What roles do regulators play in shaping sustainability reporting standards in the insurance sector?
So I think it's generally fair to say that regulators have become one of the most important cornerstones of how the whole sustainability disclosure agenda is being driven. And they are not only now looking at ensuring disclosure, but also looking at how the maturity of disclosures starts becoming more and more mainstream. So I think at core, the regulation has evolved far beyond the standard mandate of putting a stick approach on how meaningful disclosure should be made, which were driven by risk and compliance and checkboxes kind of activities. But now we are seeing that it is moving a little bit more on value creation side, where regulators are pushing companies to disclose information which is meaningful and can be comprehended. So I think I'll just break it in like 5 distinct pieces which can just amplify what role regulators are playing overall. So I think first is around setting the standards and ensuring harmonization. So this we are seeing from specifically on the insurance lens as well, and in general, we are seeing that IFRS is becoming a mainstream standard that is being adopted by most of the regulators in Southeast Asia and South Asia as well. And this is like becoming a global phenomena. From AIA standpoint, we have been seeing that IFRS is also getting adopted in most of the markets in which we operate. And what this is doing is that it is not only creating an ecosystem where we disclose information, because this disclosure is not only a checkbox kind of activity, but it is moving a little bit beyond by ensuring that disclosures are transparent and there is a proper handholding that is being provided to ensure these kind of disclosures. Now, the second point is around also creating an ecosystem where disclosures are moving a little bit more in the lines of the mainstream supervisory frameworks. So that we are seeing, for example, the climate standards or climate disclosure standards that are now coming and they are becoming mainstream. So this is taking an approach where regulators are mandating climate risk kind of assessments to be equated with things like the ORSA or the solvency assessments, and the magnitude of the risk with which it should be taken in consideration is exactly the same. Then largely, third piece is around building capacity and capability and putting a proportionality concept where regulators are also not only just enforcing action, but they are ensuring that these are things which are done in a proper phased way. And this phased approach is actually generating a lot of value because organizations can understand and take a multi-year approach to implement action as it goes. And then I think fourth point would be around driving transparency and stewardship, where regulators are ensuring that there is a greater transparency on how the disclosure should be made. This goes around the concepts of something beyond regular compliance-oriented disclosure. So which is around, like, for example, concept of double materiality, where it is not only the financial related impacts that one should see, but also aspects around the impact that the organization is generating and how it is being disclosed. So, I mean, these are largely areas in which I feel that regulators are playing a very important role, and we will keep seeing these becoming more and more mainstream as the time goes. And largely looking at more from a future standpoint, so futuristic standpoint is that while regulation is driving the disclosure agenda, but largely it will also start getting more and more mainstream by looking at the convergence of the financial reporting standards and the sustainability related disclosure standards, and concepts like assurance, internal control ecosystems, and these kind of things will take the discussion forward, and we will see that more and more regulators will adopt these practices, and thereby the disclosures will become a little bit more streamlined and mature.
Yeah, definitely. It seems as though there's a lot of thought and consideration that comes into play when trying to work with the regulators as well. And we can move on to the next question as well. I want to hear your insights on this. How can the insurance industry better support sustainability and environmental goals in the years ahead?
So I think that, thanks for that question. That is a very good question, close to my heart, because that's what I try doing on everyday basis. So when I look at an insurance company, it's all about a three-dimensional approach to look at it, which is first is as an insurer, investor, and a responsible business. So how we achieve SDGs or any sustainable development goals can be taken in from these three approaches. First is as an insurer, we provide financial ecosystems and we provide protection gaps for underserved population. We provide innovative products that will drive action, and it will also take some of the ease of access related aspects in consideration. And third is obviously providing a kind of a de-risking the sustainable infrastructure piece where you can take the agenda forward. So when I look at these three components under the insurer side, I see that we can look at providing comprehensive insurances, which is like from an AIA lens, we have AIA Vitality Program, which is an intersection of how do you do good by blending benefits with better healthcare, thereby reducing the claims and the claim ratio. And then it contributes to SDG 1, 3, and I think SDG 13. Then again, from a digital enablement point of view, ease of access, we look at reducing inequalities, which would be, I think, SDG 9, and contributing to the global goal. Now, this aspect will also get looped in a concept of ensuring that the whole digital economy that we are seeing is providing a very good ease of access and making products easily accessible. So, for example, I think 99% of our products are now digital, and around 95% claims are made digitally. So that is something that enables ease of access. And lastly, around the new mechanisms of blended finance and the investment bonds that we have. So there we look at creating blended finance opportunities with, like in recent COP, we did manage to sign a statement of understanding with MAS and BlackRock, which positions us to explore more and more innovative ways of financing this transition in Southeast Asia. Now, this is on one side. Now, other is from a lens of an investor. So we look at investment from, so we have like ESG funds and bonds, I think in the tunes of multiple billions of dollars have been put in that, which is ensuring that the transition is not just a talk, but it's also moving down the line of positioning ourselves as a strong player in the ecosystem. And then lastly, I think from a responsible business side, so we acknowledge our responsibility towards the community and the society and the role that we can play. So we have a massive campaign, which is AIA 1 billion, which aims to engage or positively inspire 1 billion people by end of 2030. So this is just one of the examples. Then there are more areas like we have our own internal advocacy program called AIA CAN that motivates and inspires our own internal employees and colleagues to take positive action that drives overall societal impact or positive societal impact. So these are some of the examples with which I feel that overall any insurance company can contribute meaningfully if you start looking at these three facets. And overarching, I think that there are three very distinct components that one can take in mind when you're designing anything for these, which will be around like, building a very strong governance model. So anything that you're doing, because insurance companies are largely driven by a lot of regulations and regulators, you need to have a very strong ecosystem of how meaningfully you're doing things. You have the right set of guardrails to position yourself as even a slow adopter, but you build on what you are doing in a very meaningful way. And then also having the data and the technology that is blended. So if I cite our own example, it's we use a lot of advanced technology and data sets that empower us to take very informed decisions on how we can drive these three different roles that I just highlighted. And then lastly, it's all about like having a cross-functional, multi-stakeholder oriented approach, because if you want to drive anything, you will have to have a streamlining approach that helps in positioning you as or positioning you on the forefront for taking any kind of meaningful action. So those are, I think, largely the components which will act as the basic contour of designing an ecosystem that can drive, meaningful change. And then not only insurance sector, but any company that we see, it can drive us to create long-term value, which will be not only looked at in isolation, which is around environmental or social or the profit side of things, but a comprehensive value which creates a long-term position for all the organizations.
Definitely. I think your answer really is very comprehensive in terms of like looking at ESG, environmental factors into play, sustainability, very multifaceted, and I think it's great in terms of what you're doing. And I can't wait to also hear your insights for the panel later on. Thank you so much, Nisheeth.
Thank you.